Guten Tag, ladies and gentlemen. Financial Ape here. Welcome back to another one. I hope you're having a fantastic day. Today I'm going to be going over how to access financial statements using TradingView. So, first things first, head on over to Google or whatever search engine you use, type in TradingView, click the first link, and you should be directed to this exact homepage. Once you're here, head on over to chart. Now, let's say you were hypothetically looking to know more about Apple. Just type in AAPL, that's the ticker symbol for Apple. Hit enter, and here we are. I want you to direct your attention to this rectangle over here. Scroll all the way down till you see more financials. Boom, voila. Now you have an overview tab, an income statement tab, a balance sheet tab, a cash flow tab, and a statistics tab. Overview gives you, as the word implies, an overview of the company. You got the market cap, you got the dividend yield, you got the price to earnings ratio, the basic EPS, you got the balance sheet, as well as the cash flow. For those who are curious, whenever you see FY here, it stands for fiscal year. TTM stands for trailing 12 months. All right, trailing 12 months. It just means it's the last 12 months. So in the last 12 months, the price to earnings ratio for Apple was 33.32. That means if you take the price divided by the earnings per share, you will get approximately 33.32. Same thing for the basic EPS. It's just for the last 12 months. That's what TTM means, the trailing 12 months. Let's head on over to the income statement tab. Now, what is the income statement? Well, it reports on the financial performance of the firm over a period of time. That is what the income statements do. So as you see, you have the gross profit, you have the total revenue, cost of goods sold, the usual suspects, taxes that a company had to pay. You have the net income, you have the basic EPS, earnings per share, that's what EPS stands for. You got the diluted EPS, you get EBITDA and EBIT. Next tab, balance sheet. Now, what is the balance sheet? Well, it fulfills the role of reporting the firm's financial position at a point in time. And I want you to note this formula. There's a formula in accounting. It's called the fundamental equation of accounting. It says that assets equal liabilities plus total equity. In other words, if you take this number, add it to this number, you will get exactly this number. That is all it's saying. Remember, assets equal liabilities plus shareholders' equity. Shareholders' equity, total equity, owner's equity, it's all the same thing. All right? I don't want you to get confused with that because a lot of different sites and different finance books, they use different terminology, but sometimes these different terminologies can be the exact same thing. Not all the time, but in this context, if you see total equity, I want you to think shareholders' equity, and I also want you to think owner's equity. They are all the same in this context. Moving on to cash flow statement. Now, what does the cash flow statement do? It reports the firm's cash receipts and outflows. So basically, it reports the cash, it refers the firm's cash inflows and cash outflows. And it's usually divided in three sections. You have the cash from operating activities, which displays the normal business of the firm, their day to day activity. And you have the cash from investing activities. That one is used to illustrate the acquisitions or sales of PP&E. Now, PP&E stands for property, plant, and equipment. Cash from investing activities also displays the purchase or sale of investments in other firms. Cash from financing activity, that displays the issuance or retirement of debt and equity securities and dividends paid to stockholders. All right, that's what the cash flow statement displays. Now, this is not a financial statement. However, it's a tool that analysts use to evaluate the financial health of a company. Now, you have the price to earnings ratio, you have price to sales ratio. It's mostly just ratio analysis. That's what the statistics are for, right? You have the return to assets, you also have the quick ratio, current ratio, inventory, right? Solvency ratios. The profit, the liquidity ratios represent the ability of a firm to meet their short-term liabilities, whereas the solvency ratio, they represent the firm's ability to meet their long-term liabilities. That is the difference between the liquidity ratios and the solvency ratios. When you think liquidity ratio, think within 1 year, and when you think solvency ratio, longer than 1 year. Hopefully, you've learned something today. If you have, please comment below. And if you haven't, please comment below. I would love to explain further. If you have any questions at all, you know where to find me. I'm always lurking in the comment section, ladies and gentlemen. Thank you for watching, and have yourself a phenomenal day. See you on the next one.